For years, it felt like crypto prices just moved on pure hype, right? Memes, tweets, the whole nine yards. But in 2025, that all changed. A completely new force kind of grabbed the steering wheel and took control of the market, and that was regulation. That massive shift is exactly what we're going to break down today.
So if it wasn't just the usual hype, what really made the charts go wild? If you were watching your portfolio, you absolutely felt it. The market was reacting to something way bigger than just the next hot project announcement.
And here's the core idea, the whole story in a nutshell. The market was caught in this massive tug of war. On one end of the rope, you had positive regulatory moves pulling prices up. But on the other end, you had these stern enforcement actions yanking them right back down. This conflict, well, that's the key to understanding the entire year.
So let's start with the positive side of that rope, the force that brought in this huge wave of optimism and, frankly, a flood of new money into the space. We're talking about the moment the big institutional gateway was finally thrown wide open.
Now, the key that unlocked this gateway was the spot ETF. And for anyone who isn't familiar, it's actually pretty simple. It's a way for big, traditional investors to get exposure to assets like Bitcoin and Ethereum through a product they already know and trust. It's regulated, they can buy in without ever having to sweat about private keys or digital wallets.
The main event, the big one, was the landmark approval for these spot ETFs late in the year. And look, this wasn't just another headline. This was the official green light that all the big players had been waiting on for years. It was like the starting pistol for a completely new race.
And the result? It was immediate, and it was dramatic. Just look at this chart. It shows the flow of institutional money before and after the approvals. That jump is, wow. It's a straight line from that regulatory green light to a massive surge in investment from firms that had just been sitting on the sidelines. And the crucial thing to get here is that this wasn't just about some short-term price pump. No, the impact was much, much deeper. This flood of new money, it boosted investor confidence across the board. It brought some much-needed liquidity into the markets, which made them stronger. And it also grabbed more mainstream attention, and pretty interestingly, it actually led to more price stability for the big assets like Bitcoin and Ethereum.
But hey, remember that tug of war? For every action, there is an equal and opposite reaction. So now we've got to look at the other team pulling on that rope, the regulators who are laser-focused on enforcement. And this brought a totally different kind of energy to the market.
This timeline really shows you just how directly enforcement news could move prices. Early in the year, just the news of an SEC investigation into NFTs caused floor prices to completely tank. Then, mid-year, a DOJ indictment of a scam project didn't just wreck that one token, it sent this chill through the entire sector. These weren't just headlines, these were powerful market-moving events. And all this pressure created what you could call a great divide. For really the first time, the market started to split into two very distinct camps. On one side, you had the compliant projects. They were transparent, they weathered the storm, and they even started attracting serious long-term investors. But on the other side, projects under scrutiny faced a brutal loss of confidence and, you guessed it, value. Okay, so we've seen the two opposing forces at play, right? But what does all of this mean for an actual investor? How do you turn all this noise into a real strategy? This is where we get practical. I want you to think of this as your personal regulatory radar. There are three key signals you really need to be tracking. First, the positive signals, the green lights. Things like ETF approvals. Second, you've got the cautionary signals, the yellow flags. That's the SEC enforcement news. And third, the big red alerts. We're talking DOJ indictments. Just paying attention to these three areas can give you a huge advantage. And let's be crystal clear about this. This isn't just background noise anymore. In today's crypto market, these regulatory updates are powerful. They're market signals. They can help you anticipate major shifts and make much more informed decisions to protect and grow your portfolio. All right, so let's zoom out a bit. When you put all these pieces together, what is the big picture takeaway here? It's that we have fundamentally entered a brand new era for the entire crypto ecosystem. If there is one lesson to take away from that whole year, this is it. The market, maybe kicking and screaming a little, finally learned to respect compliance. The old Wild West days really started to fade, replaced by a new, urgent demand for transparency.
And this new reality, it has some pretty clear consequences. First, ignoring the rules almost always led to painful losses for investors who bet on the wrong projects.
Second, focusing on projects with solid fundamentals and real, transparent governance, that built confidence, that built stability. And critically, a compliant ecosystem is what's going to attract that next huge wave of long-term institutional capital.
Which leaves us all with one final and pretty crucial question. We've seen regulation cause a lot of volatility, but we've also seen it build the bridges needed for mainstream adoption. So, is this growing framework of rules and regulations the final piece of the puzzle for crypto to go truly finally mainstream? That is the big question 2025 has left us with.
Subscribe and visit Web3 Newswire for more updates on ETFs.